All right, welcome back, everyone. I know I just finished a live, so you guys are getting a special, two lives on Friday. So I got a special guest on, Joseph Cachapalia. He's been on my channel, interviewed a few times, and some lives, and he's also been on Michael Zuber's One Rental at a Time. But today we're going to kind of start a little series, Fractional Friday. So welcome, Joseph.
Hey, thanks for having me. I appreciate it, Mark.
Yeah, man. So I think this is a space that you're really getting into, digging deep into, and on your YouTube channel is also kind of geared towards fractional real estate right now. So maybe tell everyone tuning in kind of your backstory and what is fractional real estate.
Yeah, absolutely. So I've been a real estate investor for it's 20 years this year. I bought my first duplex in 2005. I've had my real estate license that whole time. Mostly worked in commercial real estate, but over the last 7 or 8 years, spent my time in San Antonio, Texas, helping investors buy residential investment properties, mostly short-term rentals, land, small multifamily, that sort of thing. But I don't know, so I end up interacting with a ton of new investors. And so 6 or 7 months ago, I came across fractional real estate. And I had kind of heard of it. There's been different platforms that have come and gone. Um, but what it is you go online, you find there's probably at the moment I'm invested across 5 different platforms. Um, you find a website that's got, the platform will have property listings. This is something that, somebody bought. It's an investment property. It's collecting rent. Oh, sorry about that.
Oh,
And you're just buying a little piece of it. It's almost like buying a share of stock in a piece of real estate. And so um, I know people hear that and they right away think of REITs, but it's the opposite, right? In REITs, you have like a big portfolio of real estate and you're buying one little piece of the portfolio. And here you're buying pieces of individual properties. And so depending on the platform you're on, that ownership stake and a lot of the sites they call it a token because um the back end of their sites is cutting it up using some type of crypto blockchain technology, which I know nothing about. Uh, but it is so if you own that token, it might give you some rights in the rent. It'll definitely give you some rights in when you sell the property in the real world. You'll get some return on that. Um, but yeah, I mean that's it in a nutshell. It's exciting for me because I've always, like I said, for the last 7 or 8 years, my main job has been helping investors find and buy investment properties here in San Antonio. But for every one person that ever talks to me about real estate investing, there's probably, or for everyone that actually goes through and does it, there's probably another 100 that I've talked to that never actually pull the trigger and buy something. And it's a big, a lot of times if you buy investment property, you're taking like a huge portion of your net worth. Well, on a lot of these platforms, you can start with $10, you can start with $50. Um, you know, on average, I'm putting more than that per property, but you have the ability to go really almost as small as you could want to, right? But when you're putting too little money in, it might not be worth your time. But yeah, I don't want to monologue the whole time, but in a nutshell, that's how I got here. So.
I guess my first question would be, do you have to be kind of, like you said, tech savvy? You said you see a lot of crypto people in this space. Do you have to have a background in the kind of crypto space or tech
Absolutely
savviness?
not. So one of the things that's making me spend a lot of time on this space, most of the people in it right now, they are crypto people, they're not real estate people. And because of that, I think having a real estate background and understanding makes it really easy to make money in the space. But um you don't need, even though most of the platforms are built on blockchain, they're using smart contracts, which I honestly don't really even know what that is. I'm not a tech guy at all. I mean, I can barely get my YouTube channel to work, and that's not an exaggeration. Um, Going live with you today was like, I'm in panic mode trying to set stuff up. So you definitely don't have to be a tech guy whatsoever. Uh, some of the platforms are a little more than others. There's, some, it depends which ones you're doing. And so There's one, and I'm what I'm trying to do is I would take videos of me doing all of this right on every platform. When I find a new platform, my first impressions, how I use it. And I mean, there's one that you can find on that it probably took me 4 minutes just to, but then you click 5 buttons, you tell them a little bit about yourself, just like if you were starting a bank account. And you can link your bank account, or or even buy real estate with a credit card. Sometimes, I mean, some of the platforms, you can actually just use a credit card, which is mind blowing.
I just want to say quickly, good morning to everyone, or maybe afternoon for some people. Maybe we got Flavio here from Grandview, Washington. Joe V's tuning in. I don't know if you've ever connected with Hugo, Stay Winning Podcast. He's always on X and YouTube. He has a great YouTube channel also, so go check him out. But he says he just subscribed to your channel, Joseph. So
Oh,
everyone else,
awesome!
like I
Thank you.
said, go check out Joseph's channel. He's putting out, like, what were you saying? You did how many fractional real estate videos recently, and on
I
YouTube?
try to do one every day. I started in I don't know, September or something. I probably was doing them less often then, but recently I've been putting one out almost every single day. And it is just like I turn it on, I put my screen record on, and I'm like, this is the property that I'm looking at today. Because mostly I'm focused on, because there's not a lot of real estate people in this space, right? That I'm focused on what's the right way to do due diligence on a property. What are we looking for? Because one of the things that I've noticed is a lot of the people will go on these sites and they'll just buy whatever one they like the picture of, or they'll just or the site will say, oh, this has a 20% yield. And they'll just be like, well, that sounds great. Let me buy that. They're not like digging into, well, how durable is that yield? Is that because some of them are just like annualizing whatever happened last month. Well, if the tenant was behind and they collected double rent, all of a sudden your yield looks amazing, right? Or if it's a short term rental or something, where they have seasonality. So, I'm really just trying to focus on putting out content on like how we can use our real estate knowledge and experience, and eh, to make sort of outsized returns on some of these platforms.
Yeah, because I think even some of your videos, so like you said, some people might just see the pictures and the returns that they're putting on the site. But I noticed like you're actually like Google Maps, looking at the property or the listings, seeing what area it's actually in. And like you're saying, you're even breaking down like the returns they're posting. Like you said, it could be what they had last month, but you were breaking it down by like what it might be annually and whatnot, right? So you're actually digging deep into this, right?
Yeah, I'm trying to. So I think there's a lot of potential for us, going forward. I think it's a huge, it's a way that a lot of new investors can buy property, get a lot of the benefits of property ownership. It's also, depending on which platform it is, there's ways for experienced investors to leverage it. Maybe they bring their own properties onto the platform. And there's different angles like that. And there's just not a lot of people talking about it in the real estate world, right? It is If you get into like crypto Twitter, there's a ton of people that get excited about it, and because of that, I feel like they have this sort of negative selection process that's happening with their investors. You get a lot of people that are, you know, the last investment they made before buying this piece of real estate was a meme coin. Like it wasn't. They're not used to looking at cash flow. They're not used to looking at what this property does in real life. And so because of that, a lot of them have had a terrible experience on some of these platforms. I mean, some of them, there's been major ones that have gone under already. There's ones that, more than 50% of the investments on the platform have lost money, since inception 3 or 4 years ago. There's a lot of these ones that, if you just go on and you don't actually do due diligence, you're more likely to lose than win. But like the same platform that I just mentioned, that more than half of those deals have lost money since they started. I'm making a ton of money. I mean, not a ton, because I'm using an experimental amount of my net worth right now. Like across all the platforms that I'm on, which I've invested in five, I probably have around $100,000 spread out. So like about what I'd put into one investment property, right? I'm not. even though I'm spending a lot of time on it, I'm still, being somewhat hesitant to put a significant portion of my net worth on it on any one platform, right? Because I think that there's a lot to learn. There's platform risk. There's just other things to worry about. But I think that I think it's a space that if us real estate guys would get into it more heavily, it will improve the overall experience for everybody because we'll start to select the better properties that come onto the platform. Those will be the ones that sell out more. Platforms will bring better properties. We're already seeing, I've formed like a little Discord group where we've got, I don't know, I think we have about 60 of us in there now, where we just talk about fractional real estate investing regularly. And like, if we see something on one of the platforms we'd like to see changed, we get together and sort of approach the platforms. We all ask the same question at the same time. And some of them, because it is a new industry, have really been very responsive and given us a lot of what we want and ask for when it comes to like, maybe we want a little bit more transparency around the appraisals or around how they're calculating their returns, or all sorts of things like that. I know I
Yeah,
speak
trade.
in like, whole chapters, so feel free to cut me off if you ask me a simple question and you get
No,
5 minutes of talking.
no, no. Harrison's there. Happy Friday, fam. He's here hearing updates on Lego investments. Dylan's here. What's up, Dylan? I was just on a live with Dylan, so go check out Dylan also. He's doing some cool stuff. But Joseph, you kind of touched on it a bit. So before we get into maybe what platforms you've been dabbling with or what you like, not trying to pitch any, but you mentioned the Discord channel. Is that open to any one in my audience, or how do they join that?
Yes. So, let me see. Oh, am I sharing my screen still? I'm going to
It's
unshare
in the
that first.
background. It's on, but it's in the background.
Okay. So I'm just going to go and grab a link for you.
Okay, you can
Oh,
either put it in the chat or, but yeah. So that's open to anyone,
It,
or
it is open to anybody. I always put a link to it inside my YouTube. That's not a sales funnel. It's not like I do post my videos in there sometimes.
well, you know what, So it's on your YouTube channel. You're saying,
Well,
or
I put it in the link to every video,
okay.
like in the
Well,
description to every video.
everyone go over there, go subscribe to his channel, and then while you're there, go get his link for the
Yeah, there you
Discord
go.
channel, right?
Um, but I
Let's see.
also,
Yeah, yeah. I'm
let's
gonna
see.
go to the chat room.
See, this is what I'm talking about. Like, you don't have to be a tech guy. I can't even figure out where I'm supposed to put the link in this place if I wanted to put it on here.
Well, you can put, if you want, put it in the private chat, and then I
Oh,
can
okay.
share it if whatever's easy. But Harrison has a question. He says, "Do you think the future of fractional ownership is blockchain? Any crypto real estate coins you would want to invest in?"
So, I mean, and that's what I think. I get questions kind of like that, and I don't know. Like, so for example, one of the platforms I'm on all the time is Lofty, right? Lofty.ai. They kind of are one that sort of skirt, or like they are in the middle of being like a full on, you really need to know crypto stuff, to you don't really, and you can just use their user interface. Each one of their individual properties, the tokens for them, they're separate, right? It's not like you don't buy like a Lofty token and you're just buying, it's not a coin, that's real estate in that. You're buying like individual ones that are specific to each property. So I don't know that there are like just general real estate coins, right? Like it is actually specific. I mean, maybe there are, and I just don't know about it because I don't come from the crypto world. But each individual property is like on that platform. They're all set up in these Wyoming DAOs, which are like decentralized autonomous organizations. It's a special type of LLC, and then they use smart contracts. And I'm repeating stuff like a parrot. I don't know what any of this means exactly, but they use these contracts. That's what's, when you're buying and selling your tokens, that's what is happening in the background. But it's not like it's but it really is, I'm focused on the individual properties, and so each property has a different You can look them up on the blockchain and see like what's that token called. But I'm never trying to on my channel, never trying to give advice on like buy this one, don't buy that one. I'm trying to each time a new property token comes up, I will share my thoughts on this is how I do due diligence on it. This is how I dig into is this, is this yield? Does it seem real? And I'll share my thoughts on whether or not I'm going to buy it. But I'm never saying like, oh, you should buy this particular property or token. So.
Yeah, so in future weeks, we'll definitely dig in deeper to maybe looking at some platforms or properties. This one was we're just kind of getting a good knowledge of what fractional real estate is and what Joseph's doing on there in his YouTube channel. But let's see, Dylan's asking, what are the returns and liquidity like for some of these?
It's going to depend a lot from one platform to the next, and I'm using quite a few different strategies. So I'm buying pieces of properties on some platforms that I plan to hold long term. I'm buying pieces of underperforming, like tokens in underperforming properties, that the goal is to buy enough of them that I can start a vote among the co-owners, and then we sell it in real life. And then I'm buying pieces of mortgages on some sites as well. And so the returns are different on all of those, and the risk profile is different. For the ones that I'm looking to hold long term, I'm looking for, a very low double digit cash on cash return. So like 10, 11, 12% cash on cash return. And then expecting, over a long term to get somewhere in the mid teens for internal rate of return. Um, that's yet to be seen because the furthest back I'm invested on any of these sites is 8 months, right? But based on digging into those properties and looking at the performance of some of them so far, I believe that's achievable. I believe somewhere around 10% cash on cash, and then some pop when we sell it, 5 to 7 years down the road is achievable for the long term holds. Which is, if you think about it, I mean, I sit on my couch and do this all day. I don't go to see any properties. I don't talk to anybody in real life. It's an unbelievable return to be able to get, in that scenario. And in my personal situation, I get some tax benefits for it. Depending on what your income and how your taxes work, on some of them, your ownership does look exactly like I'm invested in a real estate partnership. Like some of them just send you a K1 at the end of the year for it. So that's the long term holds. The debt where I'm buying a piece of a mortgage. Most of those are pieces of fix and flip or construction loans. And so my average return on those are right around 11.5% right now. I think I've been very lucky. I've invested in about 170, 160, 170 of those so far. Only about a quarter of them have paid off. So of those, I haven't had any defaults yet. Once they start to get some defaults in there, I think it'll pull my average return down. But so far, I've been pretty lucky, over 11% return on those. And again, I mean, it doesn't mean you can sign up for any of these sites and get the same exact results, right? Like you really have to be selective, do your own due diligence on the individual properties that you're buying. The third strategy, which I talked about, which is only available in fractional real estate investing, I've been referring to it as token flips. So you see a property on the platform. That property in real life is worth $100,000, but it hasn't been paying rent for the last 2 years because it's mismanaged. And the people who invest on the site are more interested in yields than anything else. So the tokens get really cheap. And so if you bought up all the tokens of that property, it might only be 40 or $50,000 worth of tokens outstanding. And so you don't have to buy all of them. You buy your share of them, and then you propose a vote that just says, "Hey, let's sell this property in the real world." You list it for sale in the real world. It sells for the value that it should be in the real world, which, for example, in this example, we're saying it's $100,000. You get paid out based on that real world value, even though you bought it at the discounted token price. And so this has been my favorite strategy so far. Uh, I don't even like to say the return. On individual properties, I share the returns on, when each time I've closed one out, and I've only I've only had 4 that have gone the full cycle so far, and I have several that are still in there, because you have to buy enough tokens that it's worth your time to set it up to vote to sell it, actually vote to sell it, list it for sale in the real world, and get to closing. But I mean, I've had some where I've made a 40% return over a 3-month hold period. So if you annualize that, I mean, it becomes ridiculous. And you can't, and at first I thought, oh, that was just a one-off, but like each of the ones that have closed so far have all been, 20% plus total ROI, and then annualized ridiculous because it happened so quickly. Um, and so, part of it I think is there's a lot of these failed properties on some of the platforms, and so getting them moved off. I don't know if that's a opportunity that's going to exist forever. But right now, for me, that's the one that I'm taking the most advantage of, because I mean, you're basically getting the types of returns that you'd expect for flipping a property, but you're doing nothing. Like I'm doing it from my computer, so it's really kind of amazing. Um, One of the caveats with that strategy is there's only so many discounted tokens in any particular property. So, it's easy to get these really big returns when I'm using relatively small amounts of money. But if I were to try to go in and buy 50% of one of those properties, I would push the price up too high to actually make a profit doing that. So it is something that you can make fantastic returns with small amounts of money. And I mean, small relative, like, I'm talking about, the most recent one I have into it, I have about $15,000 into this one particular token. That's as much as I can, but I buy every time I buy a little bit, it moves the price up. Then I wait, and it moves. So, but let's say I wanted to invest what I'd invest in an average investment property, my down payment type money, uh, you'd end up you'd end up not being able to make the same type of return. So you have to spread it out across a lot of properties, um, which I do. I mean, I have. I don't even, like I mentioned, I've bought over 160 pieces of mortgages and probably somewhere around 60 individual properties I'm invested in across the 5 platforms I'm on.
So Harrison probably has a question that, or concern that probably a lot of people looking into it might have is, I like that proof of stake idea per property. My worries from most crypto platforms are the folks who own 51%, then rug pull sales like hawk to a coin.
Can you just say the last part one more time? Because I don't see this.
He says, let me, I'll try to see if you can see it. So he says,
There we go.
my worries for most crypto platforms are the folks who own 51%, then rug pull sales like hawk to a coin.
So, one of the things with most of these, because the way their governance is set up, you can't own more than 15% of any one property. Um, some of the platforms are different, but the ones there's none that there's somebody that does none of them that I'm invested in that somebody owns more than 51% of the property. Of the tokens outstanding for any individual property. And even on some of the platforms where you might have someone that has a higher ownership percentage, because they are focused on the decentralization part of things, they basically reduce the voting power of that. So nobody can ever own a controlling stake in one of these DAOs. Basically, it's always going to come down to a vote, and you'd at least need multiple stakeholders to do it. Um, but the other thing is you can't have this same rug pull situation because there's a real world asset behind it, right? Like the value of that token, and that's exactly what this discounted token strategy I'm talking about is, right? Like the tokens have gone down in price. But okay, we'll just sell the property in the real world and cash out. Like there's no person that has control over that value in the real world.
All right. Let's see what I got. Nothing else right now. So I guess maybe we can touch on, You mentioned, I think, 5 platforms you're using or looking at. So what 5 are those?
Yeah, so and I look at a lot more too. So and I want to mention one that I'm not on
Well,
first
I
because I
guess
think it's
quickly, how many are there roughly? Is there like hundreds of different platforms?
oh, that's a good question. So probably. I mean, I think I bet I've found between 10 and 15. Every time I find a new one, I do a quick deep, a quick dive into it, try to share what my thoughts on it. So and that's what I think the biggest and most well-known one is Arrived Homes. They are actually not a crypto-based one. They're I think the most well-known fractional real estate, where you can buy, they're actually selling securities in individual properties. So they're probably the biggest one out there. I don't invest in them because the returns they tell you you'll make, like just from their own website, are just too low for me to be interested in. And then there's a whole bunch of Arrived Home copycats that are like even using their same broker dealer, using basically their same exact setup. But they are using, sort of changing their marketing a little bit to try to make it, seem appealing. But so that's, I think, that probably the most well-known one, but it's one I don't invest in because they'll just tell you their returns, and I am not excited about it. I'd rather invest in like a index fund in the stock market or something. But that's my personal take on them. Um, the one that is, I think, probably the biggest that I do invest on is called Lofty.ai. Uh, they are, there's at any given time between 150 and 160 individual properties on that platform that you can buy tokens in. Um, they're the one that I mentioned. I think they kind of straddle the crypto world, real estate world. Okay, you do have a wallet that you need, but they provide the wallet. Like I didn't have to like go get some other crypto wallet and show up to the site with it. Like when I signed up, it created it for me. But there are some, I ended up learning what the Algorand blockchain was because of it, right? Like that's the blockchain that they use, and like every once in a while, like you'll go to do something on the site and it won't work, and it'll be like, oh well, because your wallet is missing Algorand, which I never even knew I had to put in there, right? So like sometimes you'll like bump into the crypto world on there, but you don't really have to understand it to be able to buy properties, as long as you stay away from their staking section, which I really don't understand at all. I've experimented with it, but haven't. But so that's one I probably 80% of my content is about that platform. Not because I think it's the best platform for new people to start on, but because there's just so many. That's where most of these discounted tokens I talked about are on that one. Because they have a secondary trading feature where you're buying from other people who are selling on there, right? Uh, so that's one, spend a lot of time on it. It is also the one that I've seen the most people get hurt on from just not understanding how it works. So there's they do all sorts of things that as a real estate investor make no sense to me as far as the way it's set up. Like I understand what they're doing now, but it's not at all how I would have done it if I had started a platform. And that's gonna bring me to the next one that I invest in, which is called Mogul.club. And all of these too, if you look, any of the videos that I do about them, some of them will give you free money if you use these affiliate links that I post on there. So if they have one, I put it in the videos all the time for the particular properties. Your first investment, you might get $50 on a 250 investment. So it's kind of nice. But they're a platform where it's exactly the opposite. It's like two guys that worked at Goldman Sachs. They were pure real estate guys, and they said, how can we sell this to, how can we let individuals buy pieces of these deals? And so it's a very different platform. Um, it's one that I like a lot for a new investor who just like, on average, their deals are great. I still do due diligence on every single one. I don't buy every deal they bring to the platform, but they are. Uh, you could buy 10 properties before you even realize that they're powered by blockchain. Like they're using smart contracts in the background, or they're it's being utilized, but it's not their selling feature. So if you watch some of their interviews, you find out about it, but it's not. Um, if you go on their website, it just makes sense from a pure real estate investor person perspective. So that's been a good one, but there's no liquidity as far as you won't get cashed out until that property is sold in real life. You get paid monthly up from rents, and that's where buying most of my long term holds right now. Uh, I like them a lot, but again, I've only been in there since I think I bought my first one with them in December. I'm getting paid rent every month, or I say rent, it's from the cash flow. Most of them they have a lot of short term rentals on there and a lot of pad split co living style properties on there. Um, those are the two I think I spend the most time on. The mortgage one where you buy pieces of mortgage is called Ground Floor. Uh, that's one it's been around longer than any of the others that I'm familiar with. I think they've been around about 10 years. Um, they're again, I think they're really not using blockchain at all, but I don't know. But they are actually selling securities there. So each mortgage they're cutting up into individual securities. From my perspective, it doesn't really matter. I still know, okay, I'm getting paid rent, or not rent, but I'm getting paid interest from a loan that's on this particular property. I can look up that property in the real world. Um, that's been a site. I think the returns in general are lower than the other platforms, but I think from a risk adjusted basis, to me, it seems about the same, right? Because it's a mortgage, it's a fixed rate of interest. Um, and I mean, even though they're lower, they're still, 11% plus is what I've averaged on there. Um, the other two that I'm invested on, I've got significantly less into. One is called Collab. They are they're again selling securities. They're pieces of student housing projects. They kind of they're leaning into being a little bit more of an institutional property, right? So you're getting nicer properties on their site. But I only have one deal on there, and it's because most of their properties that they bring up, for me, the returns are just too low. Like, I mean, okay, it's great that it's an institutional property, but um, it doesn't, so that, theoretically there's less risk. But if I'm not willing to take a significantly lower return because of that. And it just is. So, when they have ones that look like a little bit more juicy relative to theirs, I'll pick up more. And then one thing that they do in a lot of these sites do, which is part of the opportunity for us being really new, is they provide different incentives. So sometimes, like, oh, if you buy X pieces of this property, you'll get Y pieces in this other property. Like, they're giving you basically bonuses, because it's a new industry and they're trying to get people to invest. And so sometimes on some of the platforms where, okay, a deal is only okay, but if I can get some extra, incentive for buying a bigger piece of one, then turns it into, oh, all of a sudden that's a really good deal. Um, and then the last one is called Saul's Lot. I own pieces. It is the one so far that you just really need to understand crypto the most. I had to get a new type of wallet to invest on it. I had to do some sort of swap to get the crypto that I actually owned to be the type that would work with the site. I felt like a complete idiot trying to use it. They're doing a really innovative interest in the property. You're basically doing uh, somebody who's got their home listed for sale but needs to access some of their equity today. They're basically forward selling you a small piece of their equity at a discount, and then once it sells, you'll get paid at a non-discounted rate. Um, they're going through a revamp, and hopefully, when they come out the other end, you won't need to know nearly as much about crypto. I think they're already almost there. You still have to have a special wallet that you hook up to it, but that's it. Um, they're the newest site out of all of them that I mentioned, but I think that they have just tremendous potential from a need in the marketplace, and also the ability to give us great returns because of the short-term nature of the transactions.
Awesome. Let's see. We got Crack Canvas here stopping by. Howdy, aloha. I don't know if I've seen you in the lives before. I can't remember. I know you're in the school community, so if you haven't yet, go subscribe, please. I also put Joseph's YouTube channel in the chat, so go subscribe there. And also, Joseph has a Discord for his fractional real estate, so go check it out. Go join if you want to learn more. But we're gonna start doing these fractional Fridays, maybe twice a month, hopefully. This one is just to kind of get a breakdown of what fractional real estate is. And Flavio is messaging me on the side. He's his concern, I guess he's never heard of it. And is it trustable?
So, I mean, it's a perfectly legitimate question. There's one large platform that maybe a lot of people have heard of, maybe not, but in this space, it's very large. It's called Landa. They're I they're going through a bunch of legal troubles right now. They've had properties that are in foreclosure, and I know a lot of people that have money trapped on that site that maybe they'll never get that money back. And then, like I said, some of these others, like Ground Floor, has been around for 10 plus years at this point. It is something that each individual platform you definitely have to dig into, um, and understand where the risk is. So the ones that I invest on, I want the properties that I'm buying pieces of to be completely legally distinct entities from the platform itself. So like there's a lot of these that will say they're fractional real estate, but they're really just a private REIT where you're buying into, you're investing in their whole company and it's almost impossible to know what you're getting. And so and the reason that is I believe if you buy ones where you own individual properties, even if the company goes down that's putting them out, there should be a way for us to go and eventually liquidate the individual properties. I mean, the real answer is, investing just isn't safe, right? Like, people lose money in the stock market, they lose money on crypto. So I'd never tell you like, oh, it's 100% safe. I've made money and cashed out on properties several times now, so it is a legitimate business, right? Like there are you are you can track your ownership all the way to county records and see, okay, that this entity that I'm buying a piece of, that's who's the actual owner of the property. But there are risks. There's a risk of the platform going down, and then you have a collective action problem where you and all your co-owners in each property have to figure out how you're going to deal with it. You have the regular risk of investing in real estate. One of the things, and one of the reasons I really like it, is you don't have, you're buying real estate. Oftentimes there's a loan on that real estate, but you're not signing on that loan. So there's certain risks that you're taking off the table by investing in fractional real estate. Um, that being a major one, right? You're getting access to leverage without having to take the risk of leverage. There is the risk of it because it affects the property, but you don't have any risk beyond that because you're not signing on it. You also have a much greater ability to diversify. So I told you over the last 6 or 8 months, I've bought pieces of 60 properties and 160 loans. I did all that. I have a day job. This isn't what I'm doing full time or anything. Um, so I'm able to do that from the comfort of my home. I spend a lot of time doing due diligence, probably more than most people using the sites. But if I wanted to build a portfolio that large, going out and buying properties in real life, and it was just me, I didn't have an organization. That's like a lifetime to build that portfolio. I know people that have been in this industry for 20 years and don't own 60 properties. And so the level of so yes, I think there's some risk to it, but I think that there's also, I think not having the leverage in your own name and having the ability to have really wide diversification um, reduces your risk. And so, I think there's a trade-off. And so, to give you an example, I own I own pieces of properties now in 14 different states. Uh, Before that, I started buying in College Station when I first started buying, and then I moved up to New Jersey and owned stuff in New Jersey, and then came back to Texas and owned stuff in San Antonio. But I always just owned wherever I lived. I know some people do out of state investing. I'm pretty sure you do that, Mark. But it is, you spend a lot of time digging into a market, understanding that market if you're going to buy individual properties there. But if I'm going to buy a piece of a property somewhere, uh, you know, I still have to understand the market, realize, why do I think it's a good market or a bad market, but I don't have to spend any time networking in that market, finding my own, appraisers, agents, no, I mean not appraisers, but lenders, agents, inspectors. Like I don't have to do any of that work, and so I'm able to, um, get wide diversification in real estate, which you're just not able to by buying real world properties. So it is. I think it's a trade off risk wise.
The one thing, like you're saying, maybe buying a traditional single family home or real estate, right? You have the people are always concerned about like toilets, termites, evictions.
Right.
How do you handle that, or how is that handled on the platform, or does that impact any of these things you're purchasing?
Yep. So it varies across site, but almost always there's a third party manager that's hired. Some of the sites, we as co-owners have a way of interacting basically directly with the third party manager. So if they might have, the ability to just run things on their own until there's like a $1,500 expense, and that's just an example. It depends on our particular operating agreement, and if that comes up, they have the ability to send out an email to everybody who owns a piece of it. They give us like, hey, this is the problem. These are the possible, like, okay, we need a new hot water heater. These are the quotes that we have. What do you want to do? And we vote on it, right? Or like, this is, if we need to evict a tenant, or do you want to try to do a cash for keys? So like we have a way that property managers, we can interact with them directly, and then there's voting. So that's how some of the platforms work. Like Lofty is very much a decentralized governance, like voting type platform. And then on ones like Mogul, we basically have delegated most of that to the guys that have set up the Mogul platform. They're using third party managers, but they're also, I mean, just like classically trained institutional real estate investor guys that you can tell they've quickly become one of my favorite platforms. I'm still, not all in on any one platform, and I think I won't be. I'll always want to have my money spread on several. But so on theirs, the only things that will come down to a vote of us is, are we going to do a refinance at some point, and are we going to sell the property? All the operational decisions are left to, their that company, um, which makes it like very much more hands off. It almost feels like you're investing in a syndication with them, but it's not. I mean, it's, legally a different animal, but it is, it feels more like that, right? Where I'm betting on that company versus the other one. It's much more, uh, you know, even though we have a third party manager, but if we decide we're not happy with them, we just put up a vote and we pick a new manager, right? Like, and it, so we have some of them you have a lot of control, but I'm never visiting a property or fixing something. And I'm also never talking to a contractor, right? Like we are using, um, third party, we're using management companies as the main, person. And then some of them, they have like, one of the owners is like the delegated liaison in the group, and they might be someone who owns a little bit more. They're usually the person that brought the property to the platform initially. And so sometimes they, depending on the situation, they'll be the one that does a lot of the interacting with the management team, or sometimes they'll manage directly. But even in those instances, we still have the ability to vote to change them as manager, or to, decide on, make major decisions as far as like, do we want to convert this from a long-term rental to a short-term rental, that sort of thing. Um,
Hold on, right? So that was going to be one of my other questions. So you mentioned long term or short term. So I think I did notice that on one of the platforms. So there's different properties that are being run or operated different ways. I think, is there rent by the room also? There's short
yep.
term rentals.
Yep.
Okay, and so that's, can you folks change that after? Like let's say you invest in a certain property and then you guys decide you want to head in a different direction. Now you guys can change the strategy there.
On so for example, on Lofty, we can 100%. That's it's easy to do it on there. On Mogul, I think we probably wouldn't really be able to. I wouldn't know how to propose it through on there. You know, on there, I think the only things we're really going to vote on is if we do a refinance and if we do, if we decide to sell it. I think everything else is basically delegated to them. As far as decision making. But yeah, Lofty for sure. Um, that's probably the only one at the moment where we really get control over that sort of decision.
And I guess the other thing, so if there's a major expense,
Mhm.
do you guys have to reinvest more money, or is it taken out of like the returns from the property?
So, most of the time we're funding an operating reserve up front. Mogul does really healthy reserves. Um, on Lofty, it has become a problem sometimes because it is voting and there's collective action issues, right? Like some of the people just want to get paid out all the time. And so, in those instances where there's a major repair and the entity doesn't have any money, um, we can vote to do a capital call. And in order to propose that, somebody has to be the backer of that call. So, like for example, I've done this on some properties. We need to do some specific repair. Um, I'll say, okay, we're going to do a capital call. It's voluntary. If you don't buy into this, I'll buy all of it. So whatever the amount of money is, I'm willing to put up the full amount. And usually when we do that, we just do it at a healthy interest rate that the entity has to pay us back at. So like 13.5% has seemed to become the standard on Lofty anyway. And so I'm willing to, if it's a property I already own, I'm willing to lend my money at 13.5% to the entity. And so what usually happens is a lot of people will invest in it, in that capital call. It's a very liquid platform, right? So people will move property money from one property to another pretty quickly. Um, Sometimes we have had instances where that property has performed very poorly. Nobody's interested in putting any more money into it, and then you just have this thing that's sort of stuck. And that is what's creating this opportunity for me to buy discounted tokens and then push for a real world sale, right? So it is there, it's definitely not perfectly solved. There's and like I said, I mean, on that platform, if you bought one of every single property that was listed, on average you've lost money at this point. So you have to be really selective, and make sure it's one that is funding a reserve, or if they're not funding a reserve, understand how that's going to be taken care of. Um, yeah, because it is, there's certainly instances, and then sometimes you can have a really large issue where you couldn't have reserved for it because you didn't expect it. So
Are you able to? Can I buy directly from you? Your if I was interested.
you so for Lofty and Saul's Lot, there's peer-to-peer selling of tokens that you can do. Um, I don't get involved in that at all because it is like there have been scams where people are trying to sell their individual tokens. And like, so for example, on Lofty, you get paid out rent, your cash flow comes every day. And if I do a peer-to-peer transaction and buy tokens from somebody else, I still have to report that transaction to Lofty, or if that other person keeps getting paid the payout instead of me. And they have no real incentive to be on top of that. Lofty doesn't, because um, you didn't pay them for that transaction. So I'm always just buying and selling directly through the platforms. They do charge high fees, so I understand why some people try to avoid that. But at the moment, I'm doing well enough on all of them that, like, the fees are part of my calculation, right? If I'm happy with the return after fees, like, well, then that's fine.
I want to say what's up to Jason stopping by. He said better late than never. He's been busy with work. So just a reminder for those tuning in maybe late, Joseph's YouTube channel is in the chat and also his Discord channel. So if you want to know more about fractional real estate, go check it out. Go subscribe to his channel. Flavio says, can you move money out at any time?
Um, not on Mogul or Collab or ground floor. All of those, you have a certain hold period that you're expecting. So it is. You have to treat it like real estate, right? It's a long term investment. On Lofty, I can sell my tokens anytime I want to. I have bought and sold tokens in the same day in the same property before. Um, Now, because of the fees associated with it, you have to have a really big move in price for it to make sense to do that. And the big problem with Lofty is it's a very thin market. So let's say I have 20K worth of tokens in a property. If I sold them all today, I'd tank the price. Just one person selling just 20K of something would tank the price because the whole market is only the value of that individual property. So even though theoretically I could cash out my whole account today, I'd lose a lot of money doing it. So you have to sort of plan and sell slowly. Um, I said Mogul, you can't do it. They do have plans in the works to have like a secondary liquidity market that's supposed to open next year. What that looks like, I have no idea. Ground floor, it's always a loan, and so that you've made to a fix and flipper, and so um, basically it's a hard money loan, and so whenever it gets paid off is when you make money. Excuse me, on those ones, and so that's been really interesting. Those notes are usually 18 months is the maximum. Most of mine have paid off or the ones that have paid off, it's really been like 3 or 4 month hold periods. So that portfolio for me has churned quite a bit. Like I've sold, I think a quarter of the ones have paid in full over, like 8 or 9 months, or less than 9 months, 7 or 8 months of holding there. So it is more liquid than if I just went and took my life savings and bought one investment property. But I think the liquidity gets a little overhyped because of like how you just lose money trying to sell on most of them at any given time.
Sorry, I was muted. Okay. Yeah,
No,
I
that's
think
good.
this was a great first Fractional Friday. If anyone has any more final questions, throw it in the chat real quick. We'll try to get it answered before we sign off. Yeah, I think maybe I don't know what every other week possibly think
I'm
for a while.
perfectly happy doing that. As uh, I follow everything that happens, and as often as I think that we can be, beneficial to the audience, I'm happy to do it. I think more than every other week, and there's probably maybe not a ton of new info to put out, but yeah, I'm happy to do it. That
Okay.
sounds good.
Yeah, I think definitely we'll try to get more screen sharing going on the next one. Maybe how Joseph does his due diligence on some sites or properties and kind of get a better idea how to navigate the platforms and whatnot. But yeah, I think this is very interesting. Like you said, it's another tool. It's going to give people more opportunities to get into different areas, different markets, right? Yeah, I think this was a good first one. Anything else you want to say before we sign off?
Um, one, I really appreciate you letting me come on here because one of the things that I've noticed is a lot of the traditional real estate guys don't like talking about this space. I think they think one, maybe they lose some customers to it, right? Which is kind of silly because I think that it's actually a good stepping stone into full property investment. But yeah, no, I really just appreciate that you take the time to do this because it seems like almost everyone in the space has come from the crypto or tech world. There's very few of us that are approaching it from the real estate world, which is why I wanted to do this and why I want to talk about it, as often as possible with actual real estate guys like yourself, because I think there's a tremendous opportunity, and I think that a lot of people are missing it because they hear the word crypto in there, and it's like it scares them off when you just don't have to know anything about crypto for this to make sense.
That was my first question, right? Offline. I was like, as far as understanding crypto or like you were telling me, yeah, you're not tech savvy at all. So
Right.
Flavio, I'm not taking a shot at you for having a flip phone, but I think that would be his concern, the
Yep.
tech side of it.
Yeah.
But yeah, so go check it out, everyone. We'll be back maybe in a few weeks. Thanks, Joseph, for doing this. Like I said, go check out Joseph's YouTube channel, go subscribe, go check out his Discord, and thanks everyone for tuning in.
Thanks a lot, Mark.